we're talking about investing. Tell me a little bit about ESG.
ESG stands for Environmental, Social, and Governance, and it's basically used to describe any portfolio strategy that seeks to minimize or eliminate investments in companies that can be seen as harmful along those metrics. So, for example, an ESG strategy may seek to eliminate investments in companies that contribute to climate change or companies that produce addictive products. In this way, investors can seek to not only earn a return on their capital, but also ensure that their investments do not go into industries or companies that they may not support.
So basically, ESG is investing in your values. That sounds great. Why wouldn't everyone choose to invest in an ESG portfolio?
Well, for starters, there's some investors that are more staunch free market advocates, and they may not share other people's concerns over environmental and social causes. And from a classic portfolio theory standpoint, there are some that believe that excluding certain companies and industries from your investment portfolio lowers its overall diversity and may negatively impact your risk-adjusted returns. In a sense, those free market investors may actually profit from being willing to invest in companies that others shy away from.
So the benefit, the positive of ESG is that you're investing in your values, but the downside is you might lose some of your portfolio diversification. What does the data suggest?
Well, oddly enough, the data would tend to suggest the opposite, at least over the past 10 to 20 years. It turns out that avoiding companies that are potentially harmful to our society may be a good investment strategy, as perhaps these companies face increasing regulatory and social pressures which are harmful to their businesses. Only time will tell if this will persist, but certainly over the past decade, most investors who have pursued an ESG portfolio haven't been harmed in their returns.
It's really interesting. So if the returns are the same, what else should you be thinking about?
Ironically, for most of the investors that we speak to on this topic, the issue of returns is actually secondary to their main concern, which is making sure that their money is not being invested in businesses that they do not agree with. Of course, these clients are focused on saving and managing their retirement and potentially leaving a legacy for their heirs, but they are also incredibly focused on making sure that they do so in a way that's consistent with their beliefs.
I can see why this is really attractive. On RFG's investment platform, Steadfast, what do we offer in terms of an ESG portfolio?
We offer a wide range of portfolios that are designed to help clients with these issues. And if any one of our clients or prospects is interested in learning more, I would encourage them to speak with their advisor.